Cesar Calderon is a lead economist at the World Bank's Africa unit and a co-author of this October's version of the Africa Pulse report. When we spoke, our conversation started by exploring the downside risks to economies here in Africa from the hugely erratic trade policies coming out of the White House.
Another reason why the impact is not as high is because the trade exposure of the region is much smaller compared to China and Europe. Now, the question is, what are the downside risks? The downside risks are, one, the fact that there is still a lot of policy uncertainty. There's uncertainty on how long are these tariffs going to be, affecting exports, trade around the world. Then there's also the problem of non-tariff barriers that may ensue when it comes to critical products. I mean, new announcements that are being made by foreign administrations. For instance, there was the announcement from November 1st about tariffs on pharmaceuticals, on heavy trucks, that might be also affecting. And I think Africa mostly might be affected at the macro level, at the aggregate level, through indirect impact, meaning the problem of what's going to be the impact on global growth of the trade escalation, of further trade escalation. That's one. The impact that they might have on risk appetite, and also to some extent, an effect that is still uncertain what's going to be the impact on inflation, specifically inflation in advanced economies, because that might lead to a reversal in the trend that we're currently observing of reduced interest rates.
Where does AGOA, the African Growth and Opportunity Act, fit into that risk matrix? Because it expired at the end of September, and granted, there were about 30 plus economies that essentially were exporting things into the United States with it. Is that the new normal that we have now at the moment? And if AGOA is off the table, does that have a material impact on future growth for a lot of these economies in the region?
It's true that on the aggregate it may not affect the region as much, that the region is well equipped, but there's a lot of sectoral and microeconomic stories that are going to have a big impact in terms of the tariffs. And I'm glad that you mentioned AGOA, because AGOA expired on September, and there's going to be some specific sectors in the region that are going to be affected, specifically when you think about apparel, textiles, and footwear, right? These sectors and countries that are specialized in these sectors were benefiting from the benefits from AGOA, and of course that will to some extent increase their costs. It's gonna firms will have to adjust and try to improve productivity in order to adjust to the new costs, and hopefully trade flows continues and investments are not deterred, because that's unfortunately one of the problems that the tariffs can carry.
The report also has a very focused section looking at the job creation ability of a lot of the economies in the region. And one of the lines that stood out to me was that you pointed out that, a percentage point rise in GDP is only leading to a 0.04 percentage point increase in wage employment. And wage employment as it is already fairly small. It accounts for about 24% of employment across the region. What explains that relatively weak link? Because we've had, the narrative for the last 10, 15 years has been that, if you come to the African continent, you're looking at economies that have extraordinarily high GDP growth rates. We see that in Rwanda, we see that in Ethiopia. Kenya, for example, where I'm speaking to you from, has had a 5% growth rate for quite a few years. And yet that's not translating into job creation. Why?
That's a very, very, very key question. Africa has what in the report we call a twin job challenge. On the one hand, you have this unprecedented demographic transition that is leading to an increase in the working age population of over 600 million people over the next 25 years. This is unprecedented not only in Africa's history, but in recent world history. But the second challenge, and as important as the first one, is the need to provide quality jobs. We're talking about jobs that may enable households in the region to come out of poverty and or live a dignified life incomes that are steady, job that is protected. Unfortunately, if you look at the structure of employment in the Africa region, only 1 in 4 workers have a wage job. What are the factors that might explain that weak job creation? In the report, we mentioned 3 key pillars that African policymakers need to start working on in order to create more jobs. One is the provision of infrastructure and skills. The second one is having a conducive business environment, and the third one is having capable states. No? It's more about state capacity.